Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the local equity market began the week positively, with investors looking to pick up quality stocks that have been sold off along with the broader sell-off. Michael Gable from Fairmont Equities analyses Macquarie Group.
You know, Macquarie is one of those stocks that tends to be quite leveraged to what the broader market does. So when the market goes up, Macquarie goes up as well, but more so, but it also works both ways. And we can see that that's what's happened recently, where the market's dropped, whatever it is now. I have to look at the latest numbers, but Macquarie's obviously fallen more than the market in the past few weeks. This is a weekly chart. What I've observed is it's bounced off a very sort of key support level here around 160. So it basically started last week at 160 and has headed higher off that. So, you know, I think for investors out there who do have some dry powder and do recognise that there's an opportunity here, try to avoid the stocks that have been beaten down way too much, those that have already been trending lower before the market got sold off, because the stocks that should do best from here are those bigger quality names that a lot of people looked at last year and thought, oh, you know, I've missed out again, it just keeps going up. These are the sort of go-to stocks. So Macquarie, in my opinion, is one of those go-to stocks. I expect it to bounce pretty well, maybe up towards about 220. It's trading around 180 at the moment. And that 220 level will represent a bit of resistance, and that's where we reassess. But yeah, this is one of the stocks we were buying last week for clients.
Michael Gable is also of the view that the gold price could reach $4,000 by the end of the year. With that in mind, Jason McIntosh from Motion Trader has been looking at gold stocks in an uptrend. Here's his take on the largest listed local producer, Northern Star.
This chart of Northern Star up here now, the two moving averages I have are the 50 and the 100-day moving averages, and you can see that blue circle I have on the chart. That's where prices fell to on Monday. They briefly came back to the 100-day moving average, closed on their high for the day, and then hit a new high on Tuesday. So I'd consider buying that now. So what we've got with Northern Star, we've got a stock that's showing both relative strength and absolute strength in dire conditions. That's the sort of stock I'd want to be putting in my portfolio, not one which is just careering lower on the hope that it's going to find support and turn higher. If we are going to buy into extreme weakness, the only situation I would consider would be long-term dollar cost averaging into an index ETF. And I think that's likely to pay off over time, because it's highly unlikely that we'll never see another all-time high in the ASX 200 or the S&P 500, whatever it may be.
Hard device maker EBR Systems has just won FDA approval for its WISE CRT system in the United States. Prior to that approval, Jason McIntosh looked at the stock's technicals.
Actually been in a broad, volatile upward trend since mid-2022, and that broad trend, it is still in place despite what we've been seeing over the last week or so. I'm sure there's plenty of people in there now thinking, oh, I wish I'd sold a couple of weeks ago. But I think that if you're going to be successful in the stock market, you have to be prepared to let profitable trades run. And this has been a profitable trend for a couple of years now. And in doing that, you've got to be able to see out reasonable volatility. And at this point, the underlying trend for the stock continues to be up, and the volatility, I think, is still manageable. For me, if I was in this stock, I'd be prepared to stay there, give it a little bit more room to move. It has had that sharp pullback, but it's still within the stock's character to have this type of volatility. There was just in September last year, and this is just before the big run up in price we've had recently, there was a 34% drop. So as I say, the current drop, which is about 36%, it's within the parameters of what this stock tends to do. I'd be using a wide trailing stop if I was in this. The aim with a wide stop is you try and see off volatility where possible to stay on these broader trends, because that's where the money's made, by staying on trends, not jumping on and jumping off all the time. So, and that gives me a consistent exit point, and no guessing, no gut feel, no panicking. It's just like have that plan as to where the selling point is, and then follow it when it's hit, or stay in if it's not.
And that's it for this week's edition of The Charts. To watch, join us for more technical talk next week. Happy trading.